What's going on? We're motoring now. So this is going to be more of a lesson than a trade recap. I did take one counter trend move, and I'm just going to show you that super quick. Fit the criteria. Basically, was anticipating what just happened here. The only difference is I was trying to catch that move in here instead. When I should have obviously let this sweep. Now, the problem with letting this sweep again is technically our model basically says that we need to see a 15-minute change of character, right? So there was nothing to get in down here for us. Again, if you know, there's these moves that do happen from time to time where essentially we just don't have a model that that we can actually trade. So be mindful of these areas. Be mindful of the fact that just because we don't have a model does not mean that you can't go build one. But it's not something for how often these really happen. It's not something that I'm particularly interested in to sort of get into. I mean, it's very simple. I mean, we're in very, very heavy bearish order flow, right? Structure holds the market from here to here, from the highest to the lowest. And really the counter trend stuff, I'm not going to lose my shirt over it. You know what I mean? It's a matter of like, okay, well, what's the most realistic play? What's the next big play that's happening in the market? And I mean, to me, in terms of structure, in terms of higher time frame order flow, the next move comes from somewhere within the premium of this leg, right? So somewhere up in here is ideally where we're looking to trade potential sells from. Now, it looks very, very daunting right now. It looks as if it's never going to stop, and I cannot assure you of any specific thing here and say that, oh, it's going to stop just because structure is here. I mean, we don't control the market; we react to it, and the areas that we're sort of primed to react off of are going to be areas that are higher time frame flips that take a bunch of liquidity. Something like this, levels of liquidity to take, levels of liquidity to take. So you have to remember sort of, you know, how the market works from a, you know, an institutional sort of perspective. And if these guys push the market up like this, okay, and they push it up to basically be able to sell the market, you have to remember that they're going to come back up. We talked about this yesterday. They're going to come back up to mitigate the last of the orders. Like that's just the way that this thing operates. That's the way that the market's always operated. Yeah, I mean, this thing might fly. It's really, really tough to say. We are at the extreme. It's really interesting what we just tapped into, actually, and I'm going to show you a little bit more about that in just a second. But before I get too far ahead of myself, what I want to do is just go over the sort of counter trend trade that I ended up taking. So long story short, let me go over to the 4-hour so that we can go like this, basically in this demand wick. Oops. 4-hour demand. We're going to refine this down in just a second. So let's go down to 15. And what I want to do is just refine this down to the extreme, which is for me, the wick. And anyways, this is actually, it ends up being a 1-minute refinement in the lower half of the, so just take my word for that. And actually, you know what? Don't take my word for it. Let me show you so that we can actually understand what it is that we're looking at. Okay, so if I was to take the tool across, okay, and we're going to get rid of this. Yes, you can see like just the precision of what's happened here. So it is what it is, guys. Not much you can do. We don't have a model for it. So what I want to do is just kind of talk through what it is that I was sort of looking at. So essentially what I saw was the initial change of character, which happened here. We'd come back into sort of like the low. We had failed to essentially break structure. So demand, we've come up, we've basically had a wick break above, and for me it was really simple. I needed something to induce, right? And ideally this was going to be my level of inducement that I was looking to sort of trade into. So all I did was, because technically we put ourselves back into like we're in a counter trend against the H4, but the 15-minute is showing bullish order flow. Basically all I did was look at this wick right here. I found a refined POI. Okay, just go like this, get rid of this guy. I found a refined POI. The area that takes liquidity is basically sitting, yeah, you can see the big take. So I would say that this was arguably the only area that I was really interested in sort of getting involved. And yeah, as soon as we sort of tapped into this, this is when I got on to the seconds time frame. And this was kind of like an interesting one. It wasn't as conventional as you know, a lot of the excuse me, a lot of the you know, regular chalk and flips. So I kind of viewed this as, okay, we're at the extreme refinement. Ideally, what I want to see is I want to see at least something relevant break, and I kind of waited till this broke. And I waited for this to kind of come back. I was ready to kind of pull trigger in something in here. And right around this level is basically when I started noticing some differences. So what I saw is, obviously we made the high, made the low, we matched the high, we came down, we swept, right? We broke, but we couldn't break above this level. So once we broke down and broke above, this is essentially when I got interested in the market, right around these levels here, just with the amount of liquidity that we had just taken. You know, obviously the market's going to want to push back up to retrace. At least in my head, I was thinking that we were going to go a lot higher from here. Turns out we needed to liquidate the 15-minute lows. But yeah, all of that to say that, I mean, basically what I looked for was order flow to realign. And you can see that, you know, we had the sweep. Order flow would realign basically once this high was taken. Once that high was taken, this creates a low to be able to take a trade from. So I took a trade in and around this region right here, basically targeting, let me show you. So I got in right around this demand, right around here, covered this low, I think it was a 1.5 pip stop. And I'm just going to go out to the same thought process, but I was waiting for a price to come below, never came. Yeah, so I just saw like the little order flow shift in the, and you have to remember that we just took like a substantial amount of liquidity. The market wants to pull back. We've broken technically a substructure point, right? So when this breaks, the idea is that the market wants to sort of rebound. So I was betting on that. Basically, this was getting induced. Once it got induced, I was playing this into what I knew was going to be a weak high, but I didn't realize that we had to liquidate the lows first. So I was playing this basically up into this supply range right over here is what I was sort of looking for. So just to come up and basically come into a 21R position. So I ended up getting smashed on break even for this. I didn't really take partials. I pretty well had my ego kind of overrule everything. And very quickly, I realized that we started reacting to, you know, sort of like, I believe there was a 2-minute supply in here. I didn't bother taking any trades from here. And the only reason why is because I wasn't really interested in trading short this deep in price. I was looking for, again, just, you know, look at price, what's going on here, right? The bottom line is that we've liquidated this low, right? So once we've come down and taken the low, the next objective is going to be to retrace to be able to then possibly push back down, right? So right now, that's basically where price is sitting, right? We do have a bunch of liquidity built up. We do have this nice POI above here. I'm almost, well, I shouldn't say I'm certain by any means, but I am very suspicious of the fact that, let me just get out of here. Very suspicious of the fact that we have a beautiful flip zone that takes liquidity right here. right above these sort of equal highs. Now, I would, if and when, we sort of blast through this, I'm still aligned with the higher time frame intention here to take out this low. And it's just a matter of like, okay, we're probably coming down to essentially build liquidity, right? We're going to push ourselves into potentially see this bigger reversal, right? Tyson, New York pre-New York narrative. We were looking for shorts and talking about supply POIs. Can you confirm when your bias changed to start looking for longs? Yep, let's do it. So basically, I was looking for a long to come into the sells. Like you have to remember that. So when we first got on the narrative, we were sort of sitting right 530, right around here, right? So had we come up into my POI, right, I would have taken sells into the week lows, right? But what ended up happening is we didn't end up hitting the POI. So this isn't a logical place to see the market reverse from, right? And be able to see, structural lows sort of get taken. So all I did was, I saw this break above. I saw this as inducement. I saw this as a tradable reaction area to be able to trade this into potential sells. So, I mean, this is, just not necessarily being on the wrong side of the market. It's just, I mean, things change, right? So basically, again, just to kind of recap on what I was looking at is I was hoping to see this sort of sweep up into here, basically exactly what happened here, but I was expecting that to happen from a level that we could sort of trade from, right? Because really, we're not reacting to anything but imbalance. We don't use imbalance as a POI, or at least I don't. So yeah, I wasn't able to sort of capitalize on the sells here, just given the fact that we weren't reacting to a POI for myself at least. And then basically, like I said, with me looking at this POI and constantly looking at it, I got caught up in basically looking for longs to come up into here to then run equal lows, right? And it is what it is. I mean, you're not going to win them all. I got a good tradable reaction off of here and essentially took a break-even position on it. But yeah, I mean, like relevant structure right now is very, very simple. I mean, if we go to like the 4 hour, this is another question we had a little bit earlier on, is where is the relevant area to sort of trade from, right? And yeah, like, I mean, in terms of 4 hour market structure, structure is sitting essentially right here, right? Across like this. Now, again, we have to be wary of the fact that we've essentially liquidated lows into the deepest portion of the POI. This is going to get a lot of people enticed into the market to trade long, which is going to provide higher time frame liquidity for the run once it actually happens. But I think honestly, what should be expected here at the bare minimum is more than likely a liquidation of these highs, get rid of all that liquidity, be able to gobble up all the orders that rest above here, and then furthermore, be able to see some sort of push down like this. I think that's a more logical area. Now, with that being said, you have to remember that like we look for criteria now in a 4 hour sort of POI. Let me get rid of all my drawings. When we look at a 4 hour, I believe it's a really nice 3 hour POI. You can see that we don't really have a whole lot of liquidity to take into this POI from a higher time frame sort of perspective. But with that said, this is the area that took liquidity. This is the wick from the news candle. So sitting here like this, it's really simple. We're reacting to higher time frame demand. So now we have to look for 15 minutes to sort of realign, right? Unless we hit an extreme refinement, then we can look for a 1 minute chalk. So I would say that realistically, the only area that I'd be interested in sort of trading from would be just above once we liquidate this high. We have taken some liquidity right here and essentially just want to see some sort of inducement sweep come down. It doesn't necessarily mean it's going to happen that way, but that's the only way that, again, POIs only gain relevance depending on how they build beforehand, as well as into and away from. So right now, as it sits, not looking for shorts. Not looking for longs right now either, but I'll tell you what, we're basically going to be sitting around to kind of wait and see how things shape up here, how things shape up here. And essentially what I'm expecting is a liquidation of all of these equals and potentially coming down from there. So it's really going to be interesting to see how this sort of shapes up. It's also interesting that we're reacting to sort of like the structural low on the daily. But if you go out to, like your daily time frame and you start to, decipher what's going on here, you can see that, I mean, realistically, this doesn't break anything, right? So this doesn't break anything relevant, right? It just reacts to supply, gets pushed down. Chances are we're just reacting to the low. We could come all the way up into this larger daily supply range, right? Where we've changed character on the daily. So, you know what I mean? Like it's, you just have to wait for these higher time frame moves to really play out. Don't be scared to take some trades along the way kind of thing. But ultimately, the big trade, at least in my opinion, should be looking for some sort of excuse me, looking for some sort of higher time frame pro trend move once basically the stars sort of align. So right now, like I said, as it stands, I'm basically just sitting on my hands at this point. I mean, you can see that if this was like a 15-minute chart and you looked at this, you'd be looking for a trade probably somewhere up in here. So be mindful of the fact of where we're sitting, what's kind of happening within the market itself, and don't rush into anything and swing for the fences on anything irrational, because ultimately the market doesn't really have to do anything that you want it to do. We're just sitting here observing, looking to see what the next available move is. And right now, nothing looks super clear. So yeah, in terms of relevant structure right now, I would say that, technically this is a relevant structure point right at this level. This is also a structural point, but I think that like if you were to draw in like a obviously, like, this thing's just rocketing at this point, but I would say in a case like this, in a normal case that we were correctively sort of moving into this, I would look at this as my relevant structure, because this is essentially the highest point we would expect the market to kind of come into. So doesn't mean it's going to work out that way. We could also look at the bigger structural leg, which is right here. If we look at this as the break of structure, or if you look at this as the break of structure, right? So this is break of 15, this is break of 4 hour. So it just depends on how you sort of view these things. Like I said, I'm looking to capitalize on hopefully some sort of a half decent short at some point or another. As it stands right now, it's just a matter of waiting for criteria. And the only trade that I took was this counter trend move, and the reason I took it was to take the buys into a potential sell, and take the sell basically down into exactly where we just sort of tapped into. So that's it for today, really nice and short. Everybody understand sort of how we got to counter trend longs, and for the case study for today, should we include the buy that you took? Took a L there, but I didn't. I think it met the strategy perfect. To me, everything sort of ticked the boxes for this specific trade down here. The one that the counter trend one that I took, I had no issues taking that. Everything followed through with the actual trade plan. So if you want to add that in, it's totally up to you whether or not you'd like to. It's just an example of when price doesn't work out, right? And strategy doesn't always work. That's just the way that things go sometimes. But yeah, for me, I would say that it was reasonable to look for a trade in the lows here. Go ahead, Lucas.
Yeah, I just have a question regarding to the trade, because I kind of agree with George. So I was looking at this POI as well, but basically like how I had my market structure mapped out prior to this move was like, okay, this is my low, this is my high.
Yeah.
So we are bearish.
Mm-hmm.
We've chopped here to the upside once we took out this high of H1 demand that also sucked liquidity. Shouldn't, when price basically comes into this POI, I was kind of looking at this extreme. Like since we are counter trend, to the M15, shouldn't you wait for M15 chalk and then you should look to trade on that newly created POI? That doesn't make sense.
The M15 chalk happened here, right? So when you come into here, now we're just looking to confirm a break of structure, and we're looking at the extreme down here. We have a refined POI after we've already chalked, right?
Sorry, I don't understand that. Could you elaborate that, please? So like,
So
basically, I'm
if
just looking at the flow chart and it says, is there a valid M15 to H4 POI? There is.
yeah, over to the yeah. No, well, this is the POI, right? Right here. So this is the POI right here, right?
Yeah.
So the M15, sorry, let me go like this. So the M15 chalk happens right here, does it not?
I'm not sure, to be honest, because like all of these candles are trading lower. Like, I'm not sure like whether like I will have to unlearn some stuff.
So if we come into the POI, we push back up, come back up, would you agree that we've broken structure?
Yeah, definitely.
So would that mean that in theory, from a structural standpoint, that this should be a strong low to trade from?
Yeah, I do agree.
So that's where the idea comes from.
Okay. So maybe I'm just reading the flow chart wrongly, I guess.
So let me
Because I was kind of like waiting for a 15-minute chart, but maybe it's.
So the 15-minute chalk has already happened though, right? Like I said, so like if we're reacting to the 15-minute chalk happens right here, right? Down, up, comes back and breaks structure. So that means that we need a level of liquidity to take, and we have this sort of extreme area down here, right? So if we have this 15-minute POI and then you start refining down, which is what the flow chart sort of instructs you to do. So let me just go like this now, okay? So if we have the 15-minute, we've already got the 15-minute chalk that's happened. So this is our new POI demand, 15-minute demand, and refined M15 minute buy to sell, i.e. flips, extremes, causes, breaks of structure. Refine the M15 to the valid M3 to M1 POIs, right? So I would say that we have an M3 sitting like this, right? Agreed?
Yeah, I agree.
So let's see if we can refine down a little bit further. Okay, we've got a nice M2 sitting right here, down move before the up move that breaks, right? And let's just see if there's an M1 that correlates properly. So we have an M1 sitting right here, right? So if that's the case, you know what I mean? Like we're still following the flow chart.
Yeah.
Cool.
Yeah.
Does that make more sense?
A little bit. I'll have to go over it one more time on my own.
Okay. Yeah, so the 15-minute chalk to realign us, right? Because we technically chalk down like this, right? So once we realigned, come back up like this and broke above, this is a level of liquidity to take into the extreme POI to basically be able to go above, was the theory behind it. So we're following all avenues of the flow chart here.
Mm-hmm. Yeah, it makes sense. Thank you.
Okay. That final sweep before the pump came from an extreme demand to the left. After the extreme sweep, I waited for a 1-minute order flow to realign. Then I took the buy. In all fairness, man, look, that's cool if you did. Personally, there was no model within our flow charts to do this. We are literally trading this counter trend, counter order flow. So we needed a 15-minute chalk to get involved here. That's the only thing I'm going to say. Whether you got in and if it's with a different model, but I can tell you for certain that there is absolutely no model that could have got you involved in the flow chart right here. When we are coming back into the POI, that is not a reaction to supply. Where are you asking, Dave?
It's not a question. I was just trying to help Lucas understand there.
Gotcha.
So if you just stop moving the chart, I'll annotate real quick, but you can let me know if I'm on track here. But basically, you know, when we come down and chalk
Mhm,
and we create a POI,
mhm,
right? Sometimes on this leg here that comes back, we actually break demand, right?
mhm.
And therefore, like if this isn't reacting to supply, we don't actually need the 15-minute to realign right here. It's
That's right,
already
because there's no order flow shift, right?
exactly, but it can appear like it's partially looks like an order flow shift because it broke this demand right here, right? So I'm just trying to explain that
Gotcha.
sometimes, you know, it appears to be bearish and you're waiting for that 15-minute to realign again right here before going long, but it's
When you
already like
when you
that was
don't
the entry down
necessarily
there.
need to. Gotcha.
Is that correct?
100%. That's exactly it.
Okay.
It's basically the same thing I was trying to explain, but obviously me just making it a lot more complicated than it needs to be. The 15-minute chalk to get us back into order flow was here. We came back up. We actually broke the structural high, which means that in theory, structurally, this should be a strong low level of liquidity to take. We don't need this to realign unless this on, sorry, we don't need this to realign on the 15-minute unless this right here is reacting to higher time frame supply.
Exactly. So it breaking below this level is basically it's not a negative. It's a positive confluence for our trade idea because it's inducement.
Exactly. Exactly how
Awesome.
I viewed it at least. So,
Okay, cool. I was married to my sell bias, by the way, so I missed that trade, but
yeah,
yeah,
I
it
mean,
was a nice trade.
it didn't work out. So it is what it is. After the last 15-minute chalk, there is an entry on the M1 flip. Okay, let's go to the 15-minute chalk over here. Okay, so the chalk happens, right? Chalk happens, liquidate the low, come up. Okay, so again, like maybe I see it differently, but for the same thing, we would need to see this, right? So if we come down, we liquidate the low, right? Our supply zone is sitting right here. Okay, supply zone sitting here. So until we break this high, there's no trade idea. Unless we came back down like this and then take this into equals, that would be the only way. Makes sense. See it too, Dave. Increasing mean present supply. Yeah, sweet V-shaped recovery on the 5-second. So where are you looking there, Chris?
Just that current price, I believe.
Oh, current price here?
Yeah. Just have that POI mapped, and if you go to the 2-minute, it looks like we've just we're reacting to the 2-minute extreme refinement. It's a quite large candle though, so it probably still has room to mitigate it further.
Yeah.
Yeah, that guy right there, we just tapped into it, and it looks like we might chalk on the 1-minute.
Gotcha. I see. Supply. Yeah, well, I'm expecting to see a half decent, like we should be seeing a pullback from this. We've liquidated pretty well everything now. And yeah, now it's just a matter of following some rules, right? There we go. Start to move down. Here, I'll just open your chart. Just give me a sec, Chris. Yeah, V-shaped recovery. Yeah, I mean, I don't know that I would have taken this. I need to see a 1-minute chalk, right? Like that's like at least what the rules are. So if you want to take the 5-second, that's totally cool. Personally, I wait for 1 minute to realign before I jump on the seconds. So especially when we're counter order flow like this, right? Pro trend trading against, or pro trend with the M15, you know what I mean? We're trading this way, aligned with, you know, these structure points, but the problem with it is that, yeah, we need to see it realign on the 1 minute, at least to follow perfectly. So okay, that's it, man. Yeah, just like yesterday, same thing. It's nothing different. But after the chalk, order flow is realigned. Yeah, on depending on what time frame you look at your chalk, right? So that's what it boils down to. And like I said, for myself personally, I need to see the bare minimum. I need to see the 1 minute realign. So yeah, I don't really see a clear area that we would chalk either. Ideally, we've kind of tapped into this. I'd probably want to see another stab at this. and then start to look for something like this personally. But oh, I'm on the 2 minute. Oh, that's probably why. Okay. Give me a second. 1 minute, change of character. Yeah, so no chalk yet. No chalk yet. That I see at least. Chalk happens right here, right? Right here. That's it. There's nothing, yeah, there's no chalk yet. There's no order flow shift. So until that breaks, I don't have a trade. Personally, I'm not looking at this. What am I looking at? Why not higher low above that? Higher low right here. Well, that's just, that didn't put in a new high, right? So if this would have gone like this and swept this high, we would use this one. There's no order flow shift right now. The flow of money is intact from these levels, right? Until that breaks down, there's no order flow shift. You're looking, yeah, no, this is just a break of sub, right? Yeah, if it like I said, this needs to put in, we'll probably see it right now, you know. You have to be very, very careful here because order flow needs to shift, and like it's not done that yet. We're just reacting to this sort of demand level in here. Now, it doesn't mean that you can't, I mean, you can do whatever the hell you want. I mean, ultimately it's your trading, and you know, there might be a setup here and you might have caught the absolute top, but personally what I like to see is order flow at least realign on the 1 minute. And this is the low that puts us into this high, right? You can see that there's this big take on liquidity is probably on the 5 second. You can probably see it a little bit better. Yeah, you can just see this big push down, liquidation, come back down like this. Like this is the low that puts in the high. There's no chalk yet. Even on the 5 second, I don't see a chalk anymore. There's no demand in here. It's all here. Okay, I've been doing it wrong for 6 weeks and I wasn't aware that the chalk had to cause the sweep. Yeah, it's always the lowest point that puts in the high and then breaks, right? And that's where we get that V-shaped recovery. So yeah, this will get ran. We'll be moving over to break even, brother, just in case. But yeah, change of character is just very, very simply put, it is the low that puts in the high, gets broken, and then the idea is that if that order flow breaks and we break that demand level in the mitigation from a key level of supply, the idea is that this should respect the high, right? And then continue bearish. Cool. Go ahead, Mike.
Yo, hey man.
Hey.
So I definitely understand how selling makes sense after the massive sweep of upside liquidity, but because price kind of spiked to the recent lows before this big push, what would you say the targeted liquidity would be if we were to sell off from this area?
Okay, so
it's kind of like the same problem I had yesterday with seeing the like the void that we have right now.
I got you. So right now we're basically like expectational order flow from the higher time frame, right? It is saying that this low is weak, right?
For sure.
So right now, I would say that we're probably going to take a level of liquidity from the higher time frame before we see a sell-off. So I would say that we would probably come up to like looking for a sell from here. I don't know if it's the wisest decision, to be honest with you, because we need to take liquidity pretty heavily to be able to. So what I would look for is more than likely, and this is where, like, you know what, the flow chart is not perfect. Okay, like I said, it's not as black and white as everybody makes it out to be. The bottom line here is that we need to essentially see a shift in order flow of some sort, right? To be able to confirm what we're looking to sort of do here. And you can just see like the nature of this happening from the extreme level of demand within this structural leg. I would say that, yeah, likely we're going to try to sweep something first and then come down into the equal lows, right? Because if we take, remember what I said yesterday, if we can take like, look at, what did we do here yesterday? We took a shitload of liquidity built across mitigations. Doesn't that look very similar to how this looks right here? Just from a higher time frame perspective, right? So we can target these lows depending on where you get in. And ideally, if you're going to swing for these lows, you're going to want to see the market get rid of a lot of the liquidity first, right? Because if we get rid of all the people that sold up here, every single person that sold right here that has not gotten rid of or taken profits, their stop losses are sitting all over the place in here, right? So if
Yes.
that's the case, where does that, like, if we know that there's, you know, billions of dollars in orders or hundreds of millions of dollars in orders sitting right here, and the people that are pushing the market like this right now have the ulterior motive to mitigate out of their positions from yesterday, swing us above here so that once we start coming down to these levels, people are looking for longs. But what are we going to target, right? If all liquidity is cleared from here and all we have left is the equal lows, it's a lot easier to run the equal lows, right?
Okay. And for say, I'm sorry, go ahead.
No, go ahead. It's good.
I'd say, so say price, so we do continue up to sweep this, to sweep all that liquidity to the upside. Would you like to see a price begin to print maybe some built up mitigations closer to target in terms of
I mean, so when it comes to higher time frame sweeps, you have to remember how quickly things start to reverse, right? So every time we, like, just for example, every time we like break structure, right? Break structure, what's the first thing the market wants to do? It wants to pull back, right? So the idea behind this is that if we sweep above this, we don't necessarily need a bunch of built up mitigations based on the fact that if we've taken all orders that rest in here, what's left in the market? And that's the same argument we sort of had yesterday, is that, like, if we take all the liquidity that rests right here, there's nothing left but below the lows. Doesn't this look identical to what we're dealing with right now?
yeah, okay. Okay, so and they said so that'd be all the orders getting stacked. Oops, my bad.
Yeah, go
Under
ahead.
this. I was gonna say that as we continue up, all the orders are getting stacked below here, and that's gonna be the liquidity target, yeah?
Well, exactly. But in order for the market to want to navigate down into these levels, it's not just going to happen because you want it to happen at a POI or a structure point. And this is where that whole like WWA calls it, like, the liquidity inducement theorem, right? And the idea is that, like, if you can take a bunch of liquidity from here, okay, and all of these orders are compounded and just sitting above these highs like this, if we take all of those orders and we mitigate these orders above here, what's left in the market, right? And that's what you always have to ask yourself, is like, what's left in the market after we take all of the liquidity above these highs? It's only little.
Gotcha.
Cool.
Gotcha.
And this is
Yes,
like,
sir. Thank you.
this is a prime example of, like, the market is not perfect, because structure in theory says that we should hold here or here, right? But it's not just about structure. It's about liquidity concepts as well, right? So we'll probably get a small pullback here, and we'll probably just rocket right through here. And then it's like, okay, well, where's the next area, right? The next area is sitting right here. And does it mean we're going to reverse from here? Not necessarily, but it means that if there is more liquidity above here than there are below these lows, and we've just liquidated these lows, that means that more than likely the market wants to navigate to where the more orders are. And right now it's inevitable. The most orders in the market sit above these highs. Cool.
Okay, I like it. Thank you, man. Thank you so much.
No worries. Yeah, so we'll probably see some sort of a, I would assume we'll see some sort of a pullback, and I would actually look to trade this into equals before I'm looking for a higher time frame sell. It doesn't mean that there's not a sell available in here, but I would not be swinging for these lows from this level. Treat which trade? Afonso? The set, like taking a sell from here?
No, the higher time frame sweep. It's what I'm saying. Like when it sweeps above.
Okay, so if we kind of come up into here, right?
Yeah,
So
exactly.
you would treat this as counter trend, right? Because if we break above, you would still, like, this is a break of structure, right? So this would be a counter trend move in terms of 15-minute. However, so all that really means is that we need 15-minute to realign and then be able to jump in this way, right? Because it's pro trend with the higher time frame, but in terms of 15-minute, you would be counter. So we need to see the 15-minute chop, right?
Okay, I gotcha. Yeah, thanks.
Cool. In for 2R, good man. Yeah, everything that we do, everything that the flow chart sort of mentions, it has to do with 15 minute. Cool. That's it. That's all. We take the easy trades, man. These little freaking mitigation trades, mitigation trades. Nice and easy. Cool. Okay, I'm out of here. I'll catch you guys tomorrow. We got a live trading event. So I'm really hoping that this will line up for us tomorrow so that we can actually start to look at some of this stuff. So I would say, like, homework wise, maybe something to consider looking into would be very, very simple. Go out and look for an area where we've essentially swept higher time frame liquidity, right? 15-minute or 1 hour or 4 hour liquidity into a POY and see how that works, right? And understand how it plays out, because ideally we're kind of banking on the fact that we're thinking that more than likely there's enough liquidity above these highs for the market to want to take and then possibly move down this way. So have a look, see if you can find some examples. You don't need to submit them or anything like that, but it's good to train your eyes to understand how these things work, right? Because otherwise it's very easy to get caught in the noise of looking like, okay, well, we've broken structure, so now automatically I'm looking for longs, but meanwhile the higher time frame just wants to grab orders. A lot of people say structure is king. It is a huge component to what we do in the market. However, without orders and liquidity and understanding liquidity, there is no structure. So just remember that. So to me, liquidity is one of these things, especially in this time specifically, where I would value liquidity over structure. Cool. Have a look, do your thing. I will catch you guys tomorrow, and we'll see you then. Illuminati, I like it. Okay, peace out, guys.